This is a special podcast presentation from 700WLW.com. This is Casey Boland on Demand.
And Casey's with Hanghold Capital Management. And Casey, let's talk about inflation here. Of course, the Fed would like to generate some inflation at this stage of the game. And you say you look back over the past 20 years, we have had inflation just at a lower rate than might be optimal, correct?
Yes, and inflation is measured by the Consumer Price Index, or commonly referred to as the CPI. And over the last 20 years, it's grown at 55%. Now, it sounds like a high number, but overall inflation's been pretty low. 55% equates to an average rate of 2.2% per year.
And I guess if you look around, you'll find that there is inflation in certain areas and almost deflation. In fact, yes, deflation in other areas, depending on where you spend your money.
Yeah, when you look at the breakdown of the specific categories of goods and services within the CPI number, there's a huge disparity. And on the high end of the spectrum, unfortunately, with high inflation during the last 20 years, you've had textbooks, which has had an inflation rate of an incredible 207%, college tuition, which is just under 200%. You know, the textbook industry, they've pretty much had a monopoly. You're given a book, you have to get it. You haven't had a choice. It'll be interesting to see if that comes down in time with the trend of electronics here. But demographics, they played a huge role with college tuition expenses. There's been a huge imbalance in demand and supply, more kids. So they've had to hire more professors, but schools have really tacked on big price increases as well.
Yeah. And then medical care is running about twice the pace of inflation over 20 years.
Yeah, it's been twice the rate, so that hurts as well. And household furnishings and clothing, those are negative, actually, which is interesting, down a couple percent. But you look at technology, software down 66%, toys down 67%, TVs down 96%. You know, technology prices have benefited from two key factors: the technology adoption life cycle and manufacturing economies of scale. And bottom line is, new products enter the mass market. They move down the unit cost scale, so that flat screen TV that first came out was $10,000.
Yeah.
Now you can get a pretty good one at $500.
Remember years ago when they first put out the machines where you could burn your own CD? They were for sale to radio stations for $13,000. I think they're probably free now. they just throw it in.
That's right. If you get there at 4 or 5 a.m. on after Thanksgiving, they'll throw that in for you.
Yeah.
While inflation's been pretty benign, it's been around a little less than 2% in recent years. What's most important for most people, though, is the specific components in your household. If education, healthcare are a big part, that's going to have a dramatic impact on your finances. So it's a fascinating chart of numbers I have. If you want to see it, go to our website at hcmfinancial.com, and you can see that chart out